Big sell-off today. The market has finally bucked the trend of sell-offs being bought. So that is no longer the case. I don't know, for the last 3 weeks or so in these daily reviews, I'll talk about how sell-offs have not been working. So I've been avoiding trying to get short, but now that's different. So this changes things. It probably changed around 11 o'clock today. So now sell-offs can get follow-through. Before they've not. Sell-offs have had poor follow-through and have normally just ended up reversing back into a bubble trend. And that is no longer the case. So things will be different going into next week. You can see I have a past video here made last week about how I thought the daily chart was setting up similarly to how a past chart was. And on that past chart, we had a big sell-off. And you can just look at here the daily chart of the E-mini currently with our big sell-off day here. And effectively that sell-off day is right here on this chart. You can see the similarities. And if you're interested in what I was talking about, go back and watch this video. I'll leave a link in the description. So I am holding a small position short, and I'm not expecting the market to completely crash, but there's room down to previous lows. Right, look at the chart. We are in a trading range here. And after this big bar down, we're probably going to have more down. We have room down to 6,000. We have room down to this prior low. We have room down to the channel line here, the trend line, and also the 200 moving average. So there's lots of targets below, and we can see this open space here. So we're probably going lower over the next few days, few weeks. And so I'll hold that short position, probably until somewhere down here, probably around 59.50 is probably where I'll try to get out of it. So looking at the daily, looking at the 5-minute chart, lots of opportunities to get short. Like I was saying, probably around 11 o'clock, 11:30 was when the premise that sell-offs would be bought was no longer the case. When this was starting to hold below the moving average like this, just this alone, this sell-off alone being this strong, right, this tight of a channel, then that changes things. That's different from what we've been having the last few weeks. Last few weeks, we would not get this many consecutive bars and this tight of a channel down. And then we definitely would not, the follow-through definitely would not be held under the moving average like this and then get follow-through. So the market changed by this point. And like I said, it's going to be different going into next week. So sell-offs can start to get follow-through again. One thing I'll mention, we have this triangle drawn in from yesterday, and the market did go down to that triangle. Was I expecting a big sell-off like this? No, but I was expecting either today or next week to come down and test the apex of the triangle, which it did here. Now from there, I thought there was a chance we might reverse up because we are around the lows of the prior day, and sell-offs have been bought lately. You never really got a good entry. There's a bull bar here, but it's following 8-9 bear bars in a fairly tight channel down. So I don't want to be buying above this bull bar. And then once we see the market here trying to make this move, this reversal back up, where is it going into? It's running into this resistance at this apex right here. All right, so we have this resistance now. So it was going to be support, and now it's resistance. Then we even get this lower high here. And so that's what I have marked as a short, as selling below this bar. It's not closing near its low, but I think it's okay for it's still okay for a short just because of the context of the strong move down. And the bulls are failing to go higher here. Then also, what do we have below? We have the 6,100. So we have plenty of room, 7 points there to take a short and get out profit before it gets to 6,100. Now, like I was saying, we got more and more bear bars here that ended up adding to the sell-off and making it more pronounced. It kind of put having this many bars down in a tight channel like this kind of put an exclamation point on the move. It wasn't just a small move like one of these. It was many bars with very minor pullbacks. Now, of course, the whole day has this big sell-off, and that's interesting. I think the most interesting point to me is what happened right in here. So, get this tight channel down. Then we have this pullback to the moving average. And what I love to see is when the moving average kind of controls the price. It kind of cups price and holds it below. It does close above it here, but the immediate follow through is bad, and it can never really get much above the moving average. You can clearly see how is this holding the price there. There's also a wedge pattern. Different ways to draw it. You can start here, draw it up like this, or you could draw it from here. Either way, there's a wedge here, and there's also a double top, right, with these two highs. So we have a wedge, double top, wedge being a reversal pattern, reversing this bullish move. So, right, so we have a reversal pattern in a bear trend, which means that the market would continue that larger bear trend. Then you also have this double top. And so I have this 2 times your risk drawn here. These are the white lines. After a wedge, double top, below the moving average, and a bear trend, I think this is a great short here. You could scalp, but I think it's better to swing trade. Right, so getting short here and trying to go down for 15 or so points based on the size of that initial signal bar. So I think that's a great area to be swing trading there. Similarly here, bear bar. Now we have a lower high below this double top, then a lower high, another bear bar. Bulls made an attempt to go up, but they really couldn't get anything going. So now the market's heading back down. So I think selling below either of these bars here are okay. Like I said, you can scalp. You can take scalps for these all the way down. But when you have a market that is strongly trending and frankly is collapsing like this market was, then it's your profitability is going to be better if you swing trade, if you go for larger moves, because you can capture more of that large move that's happening. So you can scalp these, but swing trading is better. Now the market breaks below this prior low, and what it does is great for the bears. It breaks below it, but then stays below it. You can see the bulls trying to buy up past it, but it just acts as resistance now. So anytime you see support turn it into resistance, you want to consider trying to take a trade there, and especially swing trading. So you get a good looking bear bar closing near its low. After that test, market's probably going lower. And here we get 5 bars in a row. I think any of these you can try to be getting short below. You can just tell from looking at this chart up to, let's say up to this point, that bears are in complete control. And when you can say that one side is in complete control, then you really only want to be trading in that direction, and you at least want to have a small position. So let's say if you've been looking at all this and you say, I can tell the market's going down, but I'm nervous about it. Maybe the bars are big. Well, take the smallest position that you can. Take something that like you wouldn't even care if you ended up losing because it was so small, and get in that and at least hold it, right? And then you can. Then as the market goes down, you can try to trail that stop lower. So at least you're in it and you're getting something out of it. Like I said, any of these are good shorts, right? They're closing near their low and in a strong bear trend below the moving average. Those are good shorts. What was going on through here was we started to get these pullbacks, and a first pullback, you can sell that in a bear trend. So bear trend pullback, this is a low 1. So you can be selling below, I would say, either of these bear bars. And once again, you can swing trade, or you can try to get a scalp and just get a smaller move here. Whenever you have bulls trying to buy, they end up failing, then they're going to get out pretty quickly. And then when they get out, where they're getting out, you want to be getting short, because those bulls are going to be dumping their long positions, and they're going to be dumping below, especially a second bear bar like this. So first one, a big tail on top, not too big of a body, so maybe the bulls will hold. Then they get a second bear bar closing lower. They'll probably just be eager to get out. They don't want to risk holding through something like this, so they're just going to be getting out below that. And that's really what happens with all of these low 1 shorts through here. Double top in bear trend below the moving average. Strong looking bear bar, right? Probably sellers below that. Follow through bar, probably sellers below that. And then here, what we have here at the end, notice how we have several sideways bars here, small bodies, tails just going sideways. So this is a final flag. That's what we call a final flag. So when the market's been trending strongly, and then it gets to this point where it just goes sideways, then I would avoid trying to do any more selling. Maybe, I was considering selling like below here and trying to just get a scalp out of it. But whatever, a little bit more the market goes down, with this being a final flag, it's probably going to be the last push down before bears really start to take profits. So keep that in the back of your mind. That's what this formation is. It's a final flag. I was expecting there to be a little bit more of a pop down, and we didn't get that. We just kind of went sideways up here up to the moving average. But so be on alert when you see a strong trend and then you suddenly see several bars going sideways. That's probably going to be the last pullback before the market tries to reverse. So strong trend, pullback, one more small move down, and then the market would usually go sideways from there and make a larger attempt to reverse. So great day if you were able to get short. What about people that tried to get long? Well, obviously they would have been crushed today. And I think this is a great example of why you should not try to trade against the trend. You never had a good reason to be buying. Maybe here after, you could argue there's a bit of a wedge pattern here, and then there was a decent bull bar, and we've been far from the moving average for a while. So maybe you could argue about buying above here, but I just think it's just a mistake to even have that in your mind. If you see the market moving strongly in one direction, just forget about trying to do mean reversion, trying to take the opposite side. Just follow the trend. Trends tend to continue. That's, if something tends to continue and the odds are in that favor, that's where the edge is, right? It's selling, and there's a small edge in getting short if the market is going down. That's kind of like why investing works on a longer time frame, because there is a bullish bias to the market, and every year on average is more likely to be up than it is down. And over 5 years, 20 years, those odds play out. Well, the market is a strong probability that after 10 years, 20 years, the market is going to be higher than where it was previously. And trading is fractal. So it's just the same thing as if it's a 5 minute in a bear trend, right? We see the market's going down. It's holding below the moving average. The bulls are failing to go above the moving average. There is a bias there. And the way that you profit in trading is finding these biases and trading in that direction. Today was a great example of that. Plenty of trades Like I said, if you're getting nervous and you're worried, trade as small as you can, and whatever the direction of that trend is, get in it. Have your stop in there, and then at least you have something in there, and you can watch it, and you can still be a part of it. Another idea for something you can do is pull up a 2000 tick chart. All right, so a 2000 tick chart is going to act similarly to like a 30-second chart or a 10-second or a 1-minute chart. It's going to show you a lot more entries than the 5-minute chart would. I think the 2000 tick is a great tool to use when you see a strong trend because it has so many pullbacks. And in a trend, pullbacks are sold, right? If we're in a bear trend, pullbacks are sold. Right? We have moving back to the moving average, and we want to try to sell below a bear bar. All right, the very first bear bar would be there. Notice you would have been stopped out if you sold below there and put your stop above the bar. Okay. Well, chance 2. Now we have a double top, 3 bear bars with the third closing below the moving average on its low. That's a good short there. Even if you only go for 2 times your risk, you're well going to offset your first loss, and you're going to be plenty of profit on the second. And that's if you just went for 2 times your risk, right? If you held for 4 times, 5 times, 10 times, then you'd have a huge profit, and that easily offsets the 1 or 2 losses that you'll have when you're trying to catch that trade. I have another example that I wanted to show, and it's in confluence with the 5-minute chart. So back to the 5-minute chart, tight bear channel, pull back to the moving average. Like I was saying, really the key point here is I was getting held below the moving average. The bulls could not push the price above. We have a double top, and then this time here is 11:45. So let's pull up 11:45 on the 2000 tick chart. $11.45 is right here. Okay, so at this point, from seeing the 5-minute chart and then switching over to the 2000 tick, now we really want to be looking aggressively for shorts. So here's one, right? This is an idea. We're thinking the market is about to there's a good chance the market is about to start really selling and collapsing down. Selling here, you'd be pretty close to getting out here. Probably once it got this close, you'd be at least break even. So it'd be probably plus you'd be up a couple ticks here once it pulls back. Pull back first move at the moving average. You can probably wait on that. Then you have a double top here. You take this short. You'd be stopped out. Then now you have this very large bear bar, right? Clearly there's some eagerness on the bear's part trying to go lower. So if you get short below that, right, you just have one trade that's 2 times your risk, and you're easily going to offset your loser here, and you're going to be way up after just that one trade. Pull back to the moving average, right? Maybe you take this first one, you could be a loser there. Then if you take any of these others through here, once again, 2 times your risk, 5 times your risk, you're going to be way up. Pull back to the moving average, bear bar. Lots of opportunities for shorts. So whenever you see a strong trend, consider pulling up a 2000 tick chart and looking for pullbacks to the moving average. And if you're correctly identified the trend on the larger time frame, you're going to have you could potentially have some great trades on the tick chart. So if we can take trades like these, I mean, what is the challenge? What makes trading difficult if we can just simply look for a trend and then look for pullbacks like this and then try to get Just wait for pullbacks, moving average and short, right? It's very clear. We just keep on having these pullbacks and then pull back here, short below the moving average, and it goes down. So if those trades are out there and it looks so easy like this, well, why isn't everyone just making money hand over fist? Well, it's because not every day is the same. And what will happen is we'll have days like this, but then the market will change for a little bit, for a few days, for a few weeks, and it'll do something different. Like, let me pull up the daily chart again. Right, days like this, and sell-offs like this, and what we had today, right? That's where there are plenty of opportunities for trading in one direction, doing things like looking at the tick chart and looking for pullbacks there. 3 bull bars up, these large days like this, it's the same thing, but in the bull direction. And then traders start doing that, but they don't adjust to when the market changes. Just like the last few days we've had these more smaller sideways days. And people will get used to that, and they keep doing that. But then when the market does something different, then they're not going back and remembering what days were like in the past and trading that way. They just keep on trading as if it was this tight trading range. And if someone traded today like it was a tight trading range, they would have, lost everything, because they would have kept buying lower and lower, and the market just keeps going down. So recognize the market you're in. Really, really spend the time to understand what the market conditions are. Right? I say this a lot. The market will do something a certain way for a couple of days, couple of weeks, and then it does something different. But don't let that scare you, because if you have a preferred way and a preferred day, the market will come back to that. Right? We can see in the chart, if you love trading big days like this, and that's all you want to do, and that's what your personality is aligned with. Well, look, we have a day here, a couple days here, a couple days here, a day here, right? Sell-offs here and here, and some big moves through here. Like your day will come. Like the day that's best for you, you just sometimes have to wait for it. And then if it's not your kind of day, then either adjust and trade how you need to trade, or go do something else. Go do something else for a few hours, or go work out, go walk around, go to the store. So whatever the market conditions are, that's how you need to trade. The challenges that people have is they want to do the same thing every day, and the market does not present the same trades every day. So understand the market conditions and adjust to those. Understanding the setups that are good for you and you like to do, that's a key to it. But it only works if you're applying it correctly in the right type of market. So that was kind of a long-winded end to the video, but what the market's doing, it will probably have more down. Right, this bar, it's a fairly large bar closing near its low. We have room lower. And like I said, I would consider checking out this video where I was talking about how the price action that we've been having looks like previous price action. And then what the previous price action had was after a bear bar like this, it had more days down. So I think that's an interesting video. If you guys have any questions on what the market's doing or how to trade or anything like that, you can let me know in the YouTube comments or on the Discord. I'll be happy to answer on either. So just let me know. Enjoy the weekend, guys, and I'll see you on Monday.